trying to sleep or something. Okay, so I thought that the three concepts. So I said three concepts is very, very potent. Something you can see as part of the ideas you can use to frame your trade. The extended type is just like the three concepts, but the difference, right? For a bearish scenario, so you can have the bullish candle over here, a bear candle, and then you can have this one here. I'll change the color of this to this. Okay. So this happens on the chart such that you have something like this. This is a bullish engulfing, gets filled, drops, gets filled, and then this is a bearish engulfing, right? So this is the EFG setup, the three candle type. Okay. Sorry, the extended type, rather. This is the three candle type. It's essentially the same thing. No, yeah, we said this is bullish engulfing. This guy drops, makes this fill, and then we trade from this level. Same thing here. So in this scenario, right, we have bullish candle or bullish engulfing. We're expecting the old price would come buy from it, but what happened? Price did not buy from it. Price broke it, and after breaking it, it gave us a beautiful engulfing sell. So we expect that when price comes back to this level, what happens? We sell off from there. So let me show you an example. The same thing for sell scenario, right? For sell scenario, just flip the candles in your head, right? Just flip the candles. So we have this, right? Let's assume this is a bearish engulfing. Oh, let me just change it so I don't confuse you guys. For clarity, good to be clear, good to not entertain and be quick. So let me just be clear. Take off clarity. Okay, so we have this, and then we have this, ballast. Okay, so we have bearish engulfing at this point. This one is a bearish engulfing. Sorry for this noise. Let me take it out. Keep here gone. And you two, you are gone. Okay, so bearish engulfing. So normally you expect that price to come to this classic or to this open close level and sell, but that did not happen. So what happened? Price broke. And after breaking, gave us a beautiful engulfing just at the point of breaking actually. It could be at the point of breaking, it could be after breaking, it could be just before breaking. But your engulfing is there intact. Continuation. If price wants to keep pushing higher, when price comes to this level, price would buy from here. So let's see example. Let's see examples here. Other chart. There was one example that happened. I think happened. I think this week. This week, a beautiful example. Yeah, this one. Yeah, very beautiful example. Very, very beautiful. Was it this week or last week? Okay. No, sorry. Is this an engulfing buy? Sorry, I need someone to mute to show me at this point. If you want me to mute you, you can raise your hand. So, should I mute? Oh, nobody's raising their hand. That's so sad. No, you mute this way. Okay. Aisha, Isha, Isha, can you please unmute your mic? Jesus Christ, am I recording this? Oh yes, I'm recording. Sorry guys, someone should signify so we can be fast. Just one person. Just want to be sure someone is following. As long as one person is following. Good. So, oh, can you guys not hear me? Isha sent. It's okay. It's okay. It's okay. Good. Thank you. Aziz. So, Aziz, you agree that this is a bullish engulfing, right?
Yes, sir.
Good morning. Thank you. You agree that this is a bearish engulfing, right?
Yes, sir.
So, is this the extended type? Yes, it is.
Yes.
Bearish engulfing, price comes. There are a lot of examples. You'll be shocked at how many times this thing repeats itself on the chart. I remember what I said. It has to be, oh, this is another example I feel. The three candle type, right? This is a three candle type. This is bullish engulfing, this is bearish engulfing. and then price came. Oh, if I take week to week, right? Week to week, see, still within that zone. So we are looking for the three candle types. So let's just focus on that. For continuation, best for continuation. So let me look for one. There was one here. There's something else in the chat. Following. Oh, thank you guys for taking me following. Thank you. Makes me feel better. There's another EFG here. There's a three candle type here, but we're looking for the extended type. So let's go. Okay, let me go to M15. From M15. Ooh, can you guys see this one? This one is very, very juicy. It was a trade I took. I don't know if you guys saw the trade, right? See, is this a bullish engulfing?
Yes.
Okay. Is this another bullish engulfing? This is a double EG. Oh, I've not talked about double EG yet. Oh, sorry. I'm going ahead of my time. Sorry, guys. I apologize. Guys. Sincerely, I apologize. Okay, so this is three candle type also, but price missed it by the week. This is a bearish engulfing. This is a bullish. So price missed this by the week. Let's start the week. I'm looking for the extended type. I don't know, it's difficult. But let's see. And I'm going to go lower. Going lower makes me some eyes. Oh yeah, this is a good one. But this one didn't play out though. But let's see. This is a very good one, but it didn't play out. So see this is a bearish engulfing over here. And then it played out. This is a bullish engulfing over here. Right? Do you agree? Do you agree?
Yes.
Engulfing. This is a bullish engulfing.
Yeah.
Wow. Price came, tapped, and then okay. So let's see another example. I want to be sure. So let me take this off. Okay, let's see. Continuation setup. Okay, so there's another one here. Hope you guys can see it. This is a bearish engulfing here, right? This is a bullish engulfing here. When we talk about liquidity, you know why this is important. But you see, price came, taps, and then buys. Okay, we'll talk about liquidity tomorrow. Don't worry. Very interesting topic. I like liquidity. Okay, so this is another example, but this one, liquidity also comes in. We have this guy here. Take week to week, never forget to week, okay? So, and then you have this bullish candle, bullish engulfing failed, and you have this bearish engulfing just after it. Sorry, guys, this one. So what happens? Price came, take the high, take the low, talk about that tomorrow, and then continue to drop. Okay, that's the candle. Let's see another example, the past example. Let's see. Let's pick this one, but it's a bit huge, and price didn't come back to it. So just one more example, guys, before we go to BPE and BPE structure. That's also another interesting thing I like to talk about. So let's see, continuation. That's the way I remember. I know it's a continuation setup, so I just look for it when I'm looking for continuations. Okay, this is another example, right? You agree with me that this is a bearish engulfing, right? This candle engulf this candle. You agree? Do you agree? Candle 1, 2, 3 engulf this candle. It's a bearish engulfing. Do you agree with me that this is a bullish engulfing? But this is also the extended type. Okay. So I'm trying to show different variations so you know how they can actually present in the market. Okay. So let's one more example, guys, please. I need to be sure you guys are following, and I need to be sure I'm able to show as many examples as possible. Okay, so continuation setup. Let me show you this one. Well, this one is not an engulfing because it did not take out this week, so I'm not going to pick it. Okay, so I'm not going to pick that. So let's look for continuation. We only look for it for continuation. I wanted to pick this one, guys, but I don't know if you guys understand what happened here. But okay, so there's an imbalance here over here. We'll talk about imbalance tomorrow. Then you have this engulf. This also EFG type. So price came, taps, and then starts to go higher. Okay, so continuation setup. One other one, guys. Just make sure so because this here is golden. So this is EFG, right? This is an engulfing cell. Over here, this guy engulfing cell gets broken, so it becomes engulfing field. And what happens? A new engulfing forms, right? So this is the extended type. Okay, so price taps from here, buys, price came again, taps, and then still buys. Okay, so this is one of the things you have to pay attention to in your trade. So the three candle type and also the extended type. Now let's talk about BPE. Now BPE is something I learned from Phronesis. Phronesis is a very big proponent of SNR. So I learned SNR basics from him and also using involvement. So now this is how he explains BP. I would like one person, I would like us to please still remain on mute. So let's see. Scandal one. Remember when we spoke about OHLC? Now, this hey, 18, sorry, I'm not telling you. Yeah, marking on the screen. Can you please stop? It's time to mark on the screen. I'll call you guys to mark. Don't be in a rush, bro. Okay, so we said OHLC. So I need to make this wide so it will make a lot of sense. So we said price opens at this point, right? Comes low, goes high, right? Closes at this point for bullish candle. Now for the bearish candle, price opens at this point, goes high, right? Comes low, and then closes at this point. Now, the grand scheme of things, if I bring this out and just adjust this, you would note that price breaks out here and then breaks out here. So breakout. So the concept of BPE is B stands for, I think it's a common Malaysian concept. It stands for breakout. But the problem is that there are a lot of things in MSNR. P is pullback. So having to look at what is true or what is important makes you lose sight of it. So BP happens. It's also a very, see, I'm going to show you this week areas where trades that I took using BP. Okay. Very, very important. Okay. And it's also a trap. Why is it a trap? I'll tell you why. The trap, because a lot of people sometimes they forget basic things because of what they see in the market. Okay, so now as you can see, in this instance, what you have is a breakout. You just have a breakout here. There's no pullback yet. All right, no pullback. So I'm going to show you an instance where there's pullback now. So let's see this. This is a very kind of, this is an engulfing. Let's put them together. Married, but not so married. So the wick is what does the damage. Okay, so you see this wick, and then you see now what is going on here? What's going on here? I'll show you guys. A lot of times, when an average trader sees this kind of candle or this kind of wick, they are almost always quick to assume that it's a rejection. Almost always quick to assume that it's a rejection. And sometimes you can be wrong for most times. Because what we have here is, let's see, like we said, OHLC, right? Price opens for bullish candle lower, opens low, comes to the side and comes high, and then closes at the floor. For bearish candle opens here, goes high, comes to this level. However, you have retracement. This is pullback. Okay, so this is what we have here. So the week you saw, or this week, sorry guys, trying to make this neat. Okay, so this crazy week that is looking like, oh, maybe buyers are coming to the market. Oh, buyers are coming, let me buy, Jesus, Jesus, I'm missing, hey, this trade good, calm down, calm, okay, so you have breakout, different breakout, and a pullback, okay, all of these are still moving forward. So that's why trading is not difficult as it looks, but it's very, very difficult because a lot of people struggle. So you must know that if you are able to see these things in the market, follow through with it, you are doing very, very well. Okay, so this breakout, so then it's pullback. And what happens as a trader, this is where you get your entry. Okay, let me show you an example of this trade. There's a trade this week. Sorry guys, there was a particular trade. Sorry. What's that? Then that kind of oh, okay. That's a trade. Yeah, yes, I think this one. This one. What? Okay. What was this one? Right. So now, typically, I don't check M5, M30, M1. I don't check them. I don't have them on my chart, but I check them occasionally. And the reason is because I believe that when you are far away from higher time frame chart, you are most likely going to miss what's on the higher time frame and focus too much on the lower time frame. Right? There's something that is called friction, I think, in psychology, right? For example, this is an analogy I use a lot. If you decide to read a book every time you wake up in the morning, so you plan your day. When I wake up in the morning, I want to read a book. Let's say you want to read psychology in the morning. But if the book is in the living room and you are in your room, there's a chance that when you wake up, you just pick your phone first and oh, you're on TikTok, you're on Instagram, and then you probably forget to read the book. And when you get to the living room, oh, this is the book I should have read. Now, compared to someone that sleeps and then puts the book just beside their bed before they sleep, there's a greater chance that when they wake up, they see the book, pick it up, and then they will read, right? Because the person that left it in the living room has created distance, friction. So that's what happens when you have too many time frames between H1 and H4 chart. You're on H1 and H4, and then you have M15, M30, M5, M3, M1, 1 second, and all of that. So for me as a trader, it was a lot of friction. So I was missing out on what was happening on H1, H4, right? For many people, they can handle it. So that's why, again, you don't have to compare yourself to every other person. You also have to look for what works for you. So for me, I noticed that having M1, M5, M3, M30, M45 was distracting me from what was happening on H4 and H1. And that's where the gold is. H1 is where the mine is. That's where you can mine the tips. Okay? So if you are too far from it, you are likely going to be making a lot of mistakes. You're going to have FOMO, you're going to have greed. So I go to M1. And when do I go to M1? If I want to check M1, I come here. It's not in my favorite. I just come here to pick it myself when I want to check. Okay. So now, an example of BP right here. Let's see. So what do you see here? The price breaks, first break, right? Second break, pull back, and then you enter. This is just an example. I'm not saying this is an example. We're going to put everything together on Monday, right? So this is an example of BP. First break, second break, and then you enter. And BP on M15 H1, they're also always very, very powerful when you combine them together. Okay, so because I focus more on time frame components than single time frame trade. So yeah, all the time frame must tell you something before you act. That's what we need. Okay, so another example of BP is what we have here. So let's see. First break over here, second break over here. See that? What happens? Price takes the high, sorry, takes the low, takes the high, comes back to this level, and then starts to drop. Okay? So that's BP. Let's look for buy scenario like that. Let's come here. Oh, BP. Sorry, BP was yesterday. Yeah, this is- you see, break again, first break, second break, comes back, that's in fact takes the high, takes the low, and then starts to buy. Okay, all right. So another example for okay, this is not break. There was another one somewhere here. Somebody said that. Is it like the voice is not clear? Oh, my voice is not clear. Yes, you can use it for continuation. Somebody else. It's It's like the voice is not clear. Oh, sorry. Sorry, can you hear me better now? Hello? Hello? Oh gosh, my voice has been gone. Oh, the video is lagging. Yes, true, true. Yes. Hey, so you guys have not been hearing me. Oh my gosh. Hello? Can you guys hear me now?
Yes.
Okay, okay, okay. Oh, yes, it was clear. Great, great. Okay, so another example of BP. So this again, first break over here, second break over here, price comes back, and then after a lot of merry-go-rounding, yes, it's clear. Price sold off. Mhm. But you see, within this week, a lot of people would have lost money, especially if you're trading M1, M5. You'd have lost money because you're confused. Is price going to sell? Is price trying to buy? Is price trying to sell? So you're confused. But what you could have been in this sell up to this level, right? Because this is a strong engulfing. Remember when I said an engulfing that takes the low, right? Induces the low. It's a very strong engulfing. And then adds a gap level. It's a gap level on H1. Also a gap level on H on M15. So that shows you that oh, the time frames are giving you an hint. They are telling you that oh, this buy is going to happen. Put your money on it. Right? So we see gap level on H1 and also a gap level on M15 with a strong engulfing. Tell me why you should not be in this buy. There's no reason why you shouldn't, right? So that's for now. So the most interesting part of BPE is what is called breakout structure. Now we said for BPE, you can have something like this, price breaks out and then drops, right? So normally you expect that when price comes to this level or anything within this level, you want to sell. Okay, you want to sell to downside, but that does not happen. Just like support can become resistant, your breakout, your BP can also fail. Right? And what happens? You see, you get a slight retracement, and price breaks this guy out. Breaks it out brilliantly. Ooh, what does this mean? This means that there is a high chance that price is going to continue buying from this level. It happened this last week a lot of times. I'm going to show you, maybe like two, three times. It happened. Some of the trades I picked was because of this. Okay, I'll show you. For buy scenario, you can have something like this. So you're expecting that price would come here and then buy, but that did not happen. Rather, what happened? Price gave a small notch and then dropped. Comes back to this level and starts to drop. This is in a bearish market. Okay, so in a bearish market, price can do this. In a bullish market, price will break all these guys and keep to the upside. So let me show you examples of when this happened this week. So it's clear. I'm trying to use this week's price action because probably most of you must have traded this and we're not clear. We can make those things clear now. So let's see, what's it on this pair? What's it on EU? Okay, so an example, see this, see this. We broke out here, and then see we came, simple notch, right? Gave that simple notch, and then we drop, and then we broke. Tell me where price is going to use to continue to the upside, this level. Okay, and there was one particular one on EU. The trade was within EU, so that trade. On. Yeah, yeah. Let's see this. So see this, another example. See this, simple notch. So you're expecting that price was going to sell and keep selling, but what happened? We just gave a simple notch, so sell a notch, and what happened? We broke. Immediately we broke this guy. We came back. Tell me where price is going to use to continue to the upside. This level. Okay. So what happened? Price came, take a high, came to induce the low, give an engulfing of the upside. And in fact, if you're good with trend line, it's a good trend line entry over here. So that is breakout structure. Let me see another example. I need to be clear on this. Let me show you guys another example. So let's see. Let's convert down to AU. So let's go back to gold. Gold, baby, treat gold like a queen. Okay, so Just another example of gold. See, remember like last week, example of gold somewhere I can find it. It's like a continuation setup. Okay, so when you're looking for continuation, it's what I think this is it. Yeah, I think this is it.
What's up?
Yeah. Hello? Yeah, can you hear me? Is that as it? Oh, hope you can hear me, bro. So again, same thing happened here, two-time breakout. First break, second break. So what happens? We came to this level, right? Naturally, you would have been expecting that price would just keep selling, but no, it was a simple notch to the downside. And then breaks. And tell me where this continuation should come from. Okay, so see from here, that's goodbye, send buy, because this is M15, it's still a very good buy. I don't think it's not a good buy. See, 65 pips, still a very good buy. Okay, the price came again, takes the high, and then comes to induce the low, and you can pick this buy, beautiful buy. In fact, from this gap level again, beautiful buy. Probably this I would have been your first target for obvious reasons. Okay, so that's that breakout structure. Now this is a type. So there's another example where this breakout structure fails, especially when you're looking for reversals. So what you get, let me do this. What you get when you're looking for reversals would be something like this. So rather than price coming here, oh gosh, something is wrong. Maybe you guys can hear. Um, okay, so let's see. This, this is good. Sure. Network, guys, network. I'm sorry. Okay, so yeah, it was the network. Oh shit. Let's go to each one. Okay, yes, sorry, it was the network. All right, so back to this. So I'll just run over this again because I wasn't sure if the network would you guys follow me. So we said for breakout structure type one, price would break, give a simple notch where you're expecting a crazy sell reaction from. Rather, you get a simple notch and then you break the high of the other high. You break the previous high. So you expect that price is going to retrace to this level if price wants to continue to buy. The same thing here, right? So you're expecting buyers to come to price. You're expecting price to continue buying high. But that did not happen. What happened is that gave a simple notch, ooh, and then drops. So we expect that this notch is what price is going to use to continue to the upside. There is one particular trade, one very beautiful trade that I use this to calculate. Sorry guys, I need to for this trade. Oh yes, this is it guys. Oh finally. Sure. And then notch. Okay. You see this. So this here, yeah, the price came within this area, see that price retraced and then broke. This I have. Where did price use to continue higher? Simple notch. The simple notch. And give very decent pips. So imagine you entered here and you targeted this eye. Okay? Over 80 pips. Okay. So decent, very decent pips. Okay. So yeah, I think I've been able to explain that fairly well. So the next one is now you're expecting this retracement to blast high. It did not blast. And this is what we call market structure shift. So rather than it blasting high, what happens? It also gives a simple notch and breaks this low. Oh my, this is getting interesting. It breaks this low. So what does that mean? That means if price is going to continue lower, price is going to use this. Rather than this guy going all the way up, what happens? Market structure shift, breaks, retraces, and continue. The same thing here, right? So rather than this guy coming all the way low, right? And you expect it to start to come all the way low, but no, that does not happen. Why? Because market structure wants to change the reversal pattern. We just see breaks the high, interestingly, superbly breaks. Where will price continue from? Oh, you bet this level. The price retraces and okay, so let's take example on the chart. Remember reversal. So we'll look for only go to areas where we're expecting reversal to begin. So let's see. There was one here. Let's take this one as an example, right? Now, this is the notch that we're expecting buy to come from, right? But see, our buy did not even break the next high, right? Did not break the next high. What happened? Instead, it dropped. The into dropped to this point, right? Sorry, this point. So what happened next? The price came, retraced, and then sold off. That's why I said this EFG is not the only reason why price sold off here. There will be other reasons to consider. Okay. I think that was a little vague. So let me show you guys a clean one. Let me show you guys a clean one. A clean one is still here. I wanted to show you a bigger picture. So see this this guy was reacting from here. Right? So gave a simple notch, right? And broke. Okay. So we expect that when price comes to this level, what should happen? We should start to buy up, up, up. But that did not happen. Rather, we retraced and then we broke this level. So when price came back here, what would you be doing at this point? You expect sales to come from this level. You have an inducement and then price just starts to sell. Okay. Let me look for another example. To be sure this is pretty clear. Okay. So let's see another example. Always for reversal. So market structure shift always for reversal. All right. Another example. Okay. Let's see this one. Expecting buys all the way to this side, but that did not happen. So what happened? Instead, price broke. See that here? Broke the low. And then we got a retracement. See, after this retracement, a lot of people would say, oh, we should start buying, we should start buying. Hey, price has taken liquidity. That's giving a breakout. Let's buy from here for you. Sweetheart, you're wrong. This is a retracement. Price has taken the high, taken the low rather, taken the high, induced on the classic, even gave a bearish engulfing over here. So you should actually start selling. You should not buy. You should start selling from that point. All right. Another example. This is probably the probably very confusing, but I'll try and explain over and over again. Okay, so you got a simple nudge here, just around here. So did this came bam. Rather than price going all the way high, what happened? Give a simple nudge and then broke. Broke by the week. Where would price continue selling from? Just retrace this same level. Okay, this same level. Okay. Price will continue selling from that same level to the downside. So for reversals, guys, for reversals. So let me see, is there any other? Now let me look for another example. A very good example for reversals. So let's go down the bottom chain. See something here. This yeah, I think by and large that would be all. I think we've been able to cover what SNRs, what they are, talked about classic SNRs, talked about gap levels, HNS levels, different type of HNS, the type 1, the type 2. We talked about engulfings, a lot of engulfings, right? I was not able to show different examples, but I'm assuming that you guys know engulfings. This is just the basics, and I'm trying to make this as simple as it can be. So this is just basic. I'm not sure if there's anything new. I don't think there's anything new. Okay, so we also talked about OHLC, talked about EFG, very important guys for continuation setups. EFG, DP, very good for continuation setup. Okay, EFG, DP, very good for continuation setups. And also your breakout can be breakout classic scenario, breakout gap level, breakout HNS. Okay, breakout HNS also very powerful, especially if you're a scalper. You see a lot of it on M1 and M5. Okay, then we talked about BP. And we talked about the fact that BP itself can also fail. Okay, talked about breakout structure and the different types. The one that has the proper breakout and the one that has the market structure shift. Okay, so I'm going to stop the recording now. I'm going to allow for questions. I don't want to